Welcome to Echotraders. My name is Dale Elliott. You're in the Echotraders room. It's about 9:50 Eastern Time this morning. It is Tuesday, 2016, April the 5th. What we're looking for on CL this morning is the market has pulled up into the 38.2% area. It's in blue up here. It has shown resistance. The market must come back and retest support. We have moving average alignment for an up trade this morning and an entry at or near support to go to resistance targets. The market has also shown it has intentions on moving to the upside at least for a little while. So from that resistance area, and resistance area says crude oil futures will have, and it has come from that resistance area back and retesting support once again. Does it go into a continuation trade or give us a higher low? Right now we're looking for a higher low to see if the bulls are still in charge. If the bulls are still in charge here, we'll get our upper targets, and when we come back we'll either show you that it did not and we're stopped out at a loss, or that we made a few dollars. You can see a price symbol way up at 36.31. We don't know if the trade will go, but we don't know. The other key is how long it's going to take. Okay, so there's a couple factors we don't know, but there's also a few factors that we do know. We do know what we're looking for. A reason to go long would be higher highs and higher lows. So if we get a higher low here, what do you want to be? Long. All right. So when we come back, we will know a little more. And it probably won't take that long. Okay, here we are. It is now 11:22. This has taken a little while. We were thinking this year would go a little quicker. The idea here is that you should, this is a money off to the upside. And after the money off to the upside, let me use a yellow arrow. After you've taken some of your position off and you put it back on at support, you can see here our support and our higher lows are still happening. A little indecision here coming back up into the exhaustion area. We do have moving average alignment. What we talk about in the room is your smaller moving average is above the larger moving average. The larger moving average in red is the SMA 200, and your smaller moving average, whatever moving average you're using, we use at EMA 21 in the room, and we have moving average alignment so it's to the upside, so we trade long. This is occasionally a counter trend at entry, and the main thing is that you trade your plan. So as long as the market can continue to take out the highs, this is your next target high that you want to take out to get to the next target, which is 35.99. Market came almost there, but stopped at 91. So a little shy of your next larger time frame target. We'll see where that goes in a little while. So we'll keep you tuned. keep abreast. All right. We're going to zoom out of here just a little tiny bit so you can see the bigger picture. The bigger picture, the target's 36.31 way up here. And 36.99 comes in somewhere right about, get it up here, right about there. 99, and we have there's a bunch of little targets up here. You're going to look left and you see your swing high right in here at 92, 93 area. There's another little area here around 3603, I think it is, and 99, 98. We have 3611. We're trying to get to 3611 and 3631. Now, are there lots of targets in between where the price action candle and where you're projecting to take some of your profit the next time around? Yes, there's all kinds. One comes in here, 3603. It doesn't show on this chart. It would just be way too congested to show all those targets. But the thing is, the more targets you put on, the more indecisions you tend to make, and you want to take yourself out of a winning trade. Try not to do that. Let the market take you out of your winning trade on the big pullback, so you have money locked in. That's what we talk about, is take part of your position off, put some of that position back on. It's always your choice if you put it on, and then you have your 2 contracts running again, or however many contracts you may be trading. CL, not too many maybe, not for these large targets. People will often trade maybe 10 contracts, but they're only going for 2 or 3 ticks at a time, in and out of the market relatively quick. Here at Echotraders, we don't take that 10 contract risk, because it's a huge risk if the market goes against you. We would sooner, you see, and especially the membership that are trying to rebuild accounts, for instance, that you take a reasonable amount of risk, which would be less contracts. So if the market goes against you and you get stopped out and you lose a little bit of money, it's a small amount of money. If the market goes for you, that you learn to manage those trades by hanging on to the winners. How do you do that? You cap your losses, not your winners. Cap your losses, not your wins. I'll say it one more time. No, I'm just kidding. Try to get in the pecking order. That would be the next thing. You want to know a little more about the pecking order? Come and see us. We don't mind explaining that. If you just want to know, you don't have to sign up. Just send us a question. Go to the website, drop the question in there. What the heck are you talking about? The pecking order, for instance. That could be a great question, okay? And we'll just tell you. We'll tell you what it is. We don't mind sharing this is a live market, and you have a live market counter on the very left hand side. It'll tell you the date, the day, the time, right to the seconds that we're recording this. This is live, folks. All right, we're trying to get to 36.31. Can we do it? Well, I don't know, but we're going to try. All the market has to do is do the follow through. We're looking for the pullback, and you're going to look left. I'm going to put a couple of ellipses on here real quick to show you folks at home what we're looking at. We had a nice pullback here, and you look left. There it is. That's your 61. So we're looking to get back up here to retest the 161. Where's the market right now? That's what it's doing. Can it break up through and go to the next target up? 36.11 and 35 and 99. We also have a little target here of 36.03, but we're We're not real concerned. It's just once it gets up there, that's kind of like the next level. So it's not very far to go. The market has to take out this high for us to stay in the money. All right. Let's see if the market can do it. All we need is a little follow through and away we go. All right, it's dinner time here, and it's 12:18. 12:18. We had support running up the hill, and support kept running and running and running up the hill. We had moving average alignment, and now the market has put in a nice resistance area at the money off 35.87 area and says, hey, this is a double top. We're running back down to support once again. All right. So this will probably stop you out of the market. All right. So we'll see if support holds or that resistance at that yellow line up here. That's the high of the day, and it was retested and says, hey, I am strong. So if you don't have your money already locked in, you make sure you get it locked in. Because if this year market comes back against you more than you are willing to give back, well, at least you were warned. All right, entry area down here at support to go long, at resistance to go short. Just thought we'd take a minute here. It's 4:30. Came back to the trading plan trading room and see that the market has gone to targets. We looked for the green area to become a support area. It did. The market shot up to the next money off. We have another money off up a little higher, and I'll give you that target. And that target is, just 1 second, 36.75. So it's only $350 farther if you have a runner left to go to that larger time frame target. The thing here is 36.31. If you took part of your position off here and you have a runner, if you have a runner left, then just manage that. You have twice the divergence away from here, which is approximately, I'll just show you this here really quick. We're not going into a training session here, but really quick, the divergence here between your moving averages, and we'll just copy this guy and move him up. So you have twice the divergence right here. Okay, little more than, but you knew that. Okay, that's your divergence between your moving averages, the EMA 21 and the SMA 200 that we use here in the room. And we'll look for 1 times more. And we'll just stick that on top. Kind of a funny looking snowman. And we'll show you where that goes. So we said 36.75. We're going to drop the whole chart down and end it. This here brings us up into approximately, and you can see the market goes on and on and on. And this here brings you up into 36.58, 57. And we'll see if she'll go. But if you've liked what you've seen here today, give this video a thumbs up. I keep forgetting to say that. Until next time, trade well, my friends.